Hello, everyone, and welcome back to another episode. My name is Jordan, the Millennial Investor, and today we're diving into the dividend growth portfolio, and we're going to be going over one of the main holdings, one of the top ones targeted at 8% in the dividend growth portfolio, which is ticker symbol VICI or Vici Properties. Now, if you're not familiar with me and you're not familiar with what I do, I invest in both growth companies and dividend growth companies, and this is the portfolio if you're looking for a defensive strategy. We have two available here, the offensive, which is the growth portfolio, and then we have the defensive, which is the dividend growth portfolio, and the one we're going over today is Vici. Now, if you haven't seen me before, my name is Jordan, Millennial Investor, and this is my month over month since starting the YouTube channel when I first started my investing journey with $1,500 back in April of 2020, and my current holdings as of August, not April, that was 4 months ago. As of August 1st, this is my holding weighting, as well as my performance year to date, 3 months, 1 month since I switched everything over to this brokerage, and this is my month over month performances, and I'm still trailing the indexes as of August 1st, just a couple of days ago. Now, if you haven't seen me before, I do also offer mentoring sessions, so by the end of this video, if you found it helpful, if you thought that you learned something, if you gained some insight from my opinions, then feel free to reach out to me. I have an email address right here, so if you're interested in a mentoring session for getting started with M1 Finance, getting started with investing, troubleshooting with any of your brokerages, anything like that, you can reach out to me. My email address is right there. And we also have the opportunity to get signed up with M1 Finance for $10 for every successful referral. 124 people have signed up so far, as well as other opportunities like credit card referrals, Yada savings accounts, and lots of other fun stuff like that. Now, let's go ahead and get into Vici Properties. Vici, if you didn't know, had an incredible earnings report with a lot of major bullet points, specifically these four right here, which really took this company to a transformational type quarter, is what the CEO said. Completed the strategic acquisition of MGM, completed inaugural $5 billion investment grade senior notes, added to the S&P 500, which is a major one right there, and then reaffirmed their 2022 guidance. Now, if we hop over here and we look at Vici stock and we look over the last year, we can see that it's had an incredible year, which is even more impressive when you consider a time like now where the stock market in general, the S&P 500 is down dramatically. As of year to date, as of the last report on Fidelity, it marks it down at 12.58% in the negative, and then you have a company like Vici, which is over 10% in the positive. And even today, we have up a slight bit of about 5 pennies, about nickels. So now 8 pennies. Woohoo, congratulations. Now this company, it's easy to look at its stock price and think that you missed the boat and think that it's too late. I don't want to buy it now. It's too high. I'm not really interested in this company now. Well, I'm going to go over some of the main bullet points, some of the main reasons why I think this company still has more opportunity moving forward. As always, do your own research. Don't take what I'm saying as gospel. I recommend that you do your own research and run your own valuations before you do anything. But let's go ahead and get started with the first one that I want to talk about, which is their 2022 guidance. Now, if you're not familiar with REITs, this is a real estate investment trust, ERIT, a REIT. REITs work a little bit different than most typical companies in the stock market. And what they use typically for their guidance is AFFO, which is adjusted funds from operation. Now, typically you'll look at companies that use something like net income or earnings per share. So let's hop over to Qualtrim here and let's take a look at a typical company, and we'll just look at a company like, say, Apple. Apple's a perfect example. If we look at the year-over-year charts for Apple, what you're looking for is this EPS, earnings per share, and this is Apple's wonderful EPS chart. Now, what you're looking for with a company like Vici is its adjusted funds from operation, and this is a little bit harder to find in its reporting, but luckily they just reported it in their 2022 guidance right here, that they're expecting between $1.89 and $1.92 per diluted common share. Now, here's the important part. If we go back to the share price here, like I said, I still think there's more room to run with Vici, as well as getting a lot of cash flow in the meantime. Why do I say that? If we look at a company, let's say Apple, for example, we'll just use that as an example, and we go to the research tab here, and then we search Apple stock, okay? Now, obviously, these are very different companies, so just keep that in mind. But you take the share price, okay? You take 165 and divide by that earnings per share. So let's go back here and let's pull up Apple's earnings per share, which last year was 561. So you take 165, divide it by 5.61, you get a PE ratio of 29.4, the typical way of valuing companies. But what you do with a REIT, specifically with this one, is you divide its share price by its projected AFFO. So if we take $34 divided by their guidance, which they said was about $1.90, if you divide 34 divided by 1.9, you get an price to AFFO of 17.89. So this company is still trading relatively cheap in the market, below an 18, and it's pretty impressive considering many companies in the market are still trading in the high teens or even in the low 20s or above that. So Vici still has a reasonably priced company despite its rising stock price. Now, while they have solid guidance, they have lots of profitability, they have more than just that. I want to talk about what the CEO had to say and just read this one quick comment right here, this little paragraph. Edward Petoniak, which is the CEO of the company, said that the second quarter of 2022 marked another transformational quarter at Vici. Like I said, that's his words. In April, we received investment grade ratings from S&P and Fitch, enabling us to complete the largest investment bond grade offering in REIT history. At the end of April, we closed our strategic acquisition of MGM, making Vici one of the most compelling portfolios of Class A real estate among American REITs. In June, we were added to the S&P 500 index, becoming the fastest REIT to go from IPO to S&P 500 inclusion. Our improved access to capital enables us to opportunistically pursue transactions as we continue our growth journey. Additionally, we continue to expand our growth funnel by entering into a transaction with Cabot, a leading developer, owner, and operator of world-class destination golf resorts and communities to fund the development of Cabot Citrus Farms property located in the Tampa Bay area. This transaction is our first investment in the unique pilgrimage golf experience sector and demonstrates our ability to source relationships with premier placemakers in a way that is beneficial for both Vici and its partners. So you can see a lot going on there, which goes hand in hand with what we wanted to look at, which is the S&P 500 and the investment grade rating. Now, when this company was initially announced that it was going into the S&P 500, which was June of this year, so about a month or two ago, that is a big thing. So for a couple of reasons. The first one is that this company now will attract a lot more capital. But furthermore, not only will it attract a lot more capital, it'll also give this company to finance many different deals at incredibly low rates. Now, we know that interest rates have been going up quite a bit throughout 2022, now reaching a couple percent versus at 0% just a year ago. But they were to finance these deals in the low 4% range. 4.375, 4.75, you can see that this company is generally financing a lot of its major deals generally between 4 and 5%. Now, you have to also factor in the interest rates have gone up in the last year, so it's not like it was a year ago when you could see some companies like this. I think if we go back to 0% interest rates, which I don't think will be happening, but I'm saying if it were to happen, this company would likely be financing deals such as this at, who knows, 2, 3% interest rates, which is just incredible to think about. So it gives this company a lot of leverage due to its incredible credit ratings. Now, last but not least, I just wanted to show the revenue charts of Vici. We have apples here. Let's pull up Vici's. This company has been doing acquisitions like crazy, which you can see has caused this company to hit record revenue after record revenue, and the last quarter was no exception. Generally, the last couple of quarters being in the high 300s. This quarter, they broke above $400 million in revenue, coming in at $416, and the profitability followed alongside it, hitting that really high AFFO number. And I wanted to show real quick, this is what gave me the idea for the video. When I logged into Wall Street Journal today, the first article I see, Las Vegas casinos are booming. That's the headline of the business section of the Wall Street Journal today on August 4th. Now, it says, whatever jitters they might have about a potential recession, people are flocking to the entertainment and gambling oasis. And I think that Vici is definitely taking advantage of this. This is why they've been able to raise their dividend consecutively every year, and they're planning on doing that. They will probably be announcing it anytime, either today or probably next week, more than likely. They generally announce it in early August. But this is just a great company. I think it has comparable management. I think it has lots of growth opportunities, has done lots of mergers and acquisitions to grow its company, and made lots of opportune deals that have made advantage leverage for shareholders. This is why this company I still think has value at $34 a share, but furthermore, even if you're not interested in share price, if you're a dividend investor, specifically a dividend growth investor, you're looking at likely a dividend raise coming any day now, and a dividend yield at 4+%. It is hefty, very high dividend yield considering the circumstances that we currently have in the market. But that's all for me, guys. If you want to check any of these things out, if you want to get signed up with One Finance, if you want to reach out to me about a mentoring session, or if you want to do anything of the sort, to sign up down below, check it out. Feel free to comment if you enjoyed this video and if you found value in it. And this is my portfolio, my performance, like always, that I'll continue to show throughout the channel and give you updates on companies that I found interesting. And thank you guys so much for watching all the way. If you did, I really appreciate it, and I'll catch you guys next time.